All right, let's get this show on the road. Okay, fantastic. Hey, welcome, guys. Good morning to you, wherever you're joining from. We're doing the Monday Morning Matters with me, Kalu Aja. And of course, we're talking about the key events that occurred this week. And of course, we're going to set ourselves up for the week in question. We've got a few slides to run through today. Just a few slides we're going to run through today. And essentially, the show is about 30 minutes where we talk about those key actionable economic news coming out of Nigeria and the world, just to keep you abreast, and of course, set you up, should we say, for success this week, right? That's what we're doing today. So essentially, if you're on YouTube, you should be able to follow us on YouTube. And of course, if you're not, we're also going to try to share the slides on here for you as well, right? So let's get right into it for this week. I have a picture here, macro picture for this week in Nigeria. So let's look at what we're doing. We want to pick up the key macroeconomic indicators in Nigeria, the things that really matter in terms of the economy of Nigeria. And that has got to do with the oil price and the oil production. And we want to basically run that story and see how we are doing today in Nigeria. So right now in Nigeria, we're still at 1.6 million barrels per day, which is not a lot at all, because that's the OPEC quota is about 1.5 million barrels per day. Nigeria's budget's about 1.7. But 2005, Nigeria used to do about 2 million barrels a day. So that's a very, very key number. We've got to get that oil production number really, really up in Nigeria if we want to have any sense or any, should we say, if we want to meet the budget. Because if we don't meet that production number, we have to borrow more, of course, to meet that number. Capital importation about 5.64 billion. That's up from last quarter. So that's some good news there, but still not enough. We're importing capital in terms of loans, i.e. foreign portfolio investments, and not really foreign direct investments. Foreign direct investment in Nigeria is still very, very low. The quarter in review, we're still at about 126 million million dollars. That's a pittance for an economy the size of Nigeria. We're doing $6-7 billion in 2024, 2014, 2013, 2012. Now we're down to about 126 million. So we can do, of course, a lot better in terms of how we are attracting capital to Nigeria. Debt is up, both domestic and both external debt, that is up. So that's a worry for Nigeria. Definitely it's going to meet its capital. That's going to be a worry for us, right? Okay, let's go further and take a look at what we're doing in terms of the core macroeconomic numbers. I talked about it last week. If you look at Nigeria's interest rates, if you are a borrower, you are being penalized. But if you are a lender, you are being rewarded. What I mean is this: if you have £1 million and you go to the bank today to deposit the funds into the bank, if you do a 3-month deposit in Nigerian bank, you're going to get about 11.82%. And of course, we're quoting the Central Bank of Nigeria's 3-month tenure for deposit rates in Nigeria. You're going to get about 11.8%. But if you try to borrow from Nigerian banks and you are a prime means you are the best borrower, like the government's going to borrow you at that rate that is the best, a blue chip firm, you're going to pay about 18.02. But if you're just a normal borrower, your rate to go up as high as 30%. So what you see is that if you have funds to deposit in the banks in Nigeria, you do tend to get good rates. But if you are borrowing, right, you're going to pay astronomical. So the problem with this is that SMEs, small, medium enterprises, cannot survive in an environment where we have the MPRs about 27 and those guys are borrowing about 30. That's why you see a lot of no job creation is happening in Nigeria, because job creation happens at that level, the micro level. You create jobs at the small business level, and it then adds up to the composite macro number in Nigeria. So if you have credit at 30%, and where's that 30% coming from? The monetary policy rate in Nigeria, the rate that the central bank borrows money to or lends money to other banks, is at 27%. That's the problem. So if you are lending money to folks at 27%, of course, it's going to be a problem, because then no one can borrow at that rate. So I'm just going to share again. If you want to look at the visuals, if you go on my Twitter feed, you'll see where I'm sharing those visuals that I'm talking about. These are the CBN macroeconomic numbers. Again, MPR rate is 27. If you are putting money in the bank, on average, you're going to get about 11.82, but you are borrowing and you are prime, you are borrowing at 18. If you're non-prime, you're borrowing at about 30. So you can't have an economy where we cannot have credit going to the small and medium enterprises. That's not going to grow the economy in any way. Again, if you look at this next slide, right, you will then see when we're talking about this rate, that the trend in average term deposit and lending rates, again from the Central Bank of Nigeria. So you see lending rates at about 31%, but you then see deposit rate at about 11%. So essentially what we're saying is that the economy is kind of upside down. If you're a small business, there's no point going to borrow money at 30%. It's too much. You end up putting money in the bank and just getting 10%, 11% on your money. But what then happens is that because you're not borrowing, you're not creating jobs, you're not creating commerce in the economy. So the economy is more or less banks collecting deposits from folks at about 10%, and they're going to buy treasury bills, which pay them 20%. So that's not banking. That's also not the economy. So the economy is not really set up correctly if we want to use it that way. And we've got to fix that. How can we fix that? We've got to incentivize the banks and the SMEs to lend. And the only way you do that is to reduce the MPR so that the banks can then lend money to more SMEs. But when you do that, you get inflation, because now there's too much money in the economy. So I understand why CBN is hesitant to reduce the monetary policy rate. But if you don't reduce the monetary policy rate, you are not going to get SMEs borrowing to expand their business. So again, if you're on Twitter, you'd see that link there. Of course, if you're also on YouTube, you'll see the graph I'm sharing there, which just basically shows you what Nigeria is doing in terms of the lending and deposit rates. We've got to do better than this. We can't run an economy where we are lending out money at about 31%. It's just not going to work, right? Okay, let's go further into into today. What was the big news we had last week? The big news, of course, was the Naira. The Naira is doing perfectly well. It's becoming very strong. The Naira closed last week at about 1363 to the US dollar. That was an appreciation. So the Naira is becoming stronger. Look at it this way: since we had the devaluation on purpose of the Naira, when we remove the peg, Naira has gone from about 450 all the way to about 1700 or 1600. It's now come down to about 1363. So a bit of good news there, because Nigeria is an import economy, right? Wrong. Nigeria does more export than we do import, but we do a lot of import of our key goods. Crude oil in Nigeria is imported, believe it or not. So Dangote imports crude oil, then he makes PMS and he sells to you guys locally. We also import a lot of food. That's why food has gone down in price. So when the currency is stronger, it favors the importers, because we can then import crude oil, we can import food at a lower price. But when the currency is weaker, it favors exporters. And remember, Nigeria is more of an export economy than an import economy, because we export more crude oil than we import. But the key story is that the Naira has gone up and is strengthening. So it's sort of helping Nigeria also to close its budget deficit. Remember, we've got to sell oil, we've got to get all those revenues. So if Naira is a bit stronger, we reduce how much we pay in debt servicing to the Eurobonds. Nigeria's biggest expense item today is how much we pay as debt servicing. And debt servicing to who? To Eurobonds primarily. So when we have a stronger Naira, it reduces the debt service cost that Nigeria is paying to service her debt. So that's a bit of a good news there. So the question is the Naira getting stronger because of what Nigeria is doing, or are there external factors? Remember that currencies always trade in pairs. So if the Naira is getting stronger, that means something is getting weaker. And that's the argument we're having in Nigeria right now economically, to say that is the Naira getting stronger, or is the US dollar becoming weaker? I think it's a combination of both. Number one, the Nigerian central bank has been able to do very, very prudent management of its resources. Is spending less, is keeping more of its dollars in-house, is just intervening at key points. So it's not spending too much money from its foreign reserves to intervene and to strengthen Naira. But then again, the US dollar has also lost a lot of value. Last year, almost every currency on earth was beating the US dollar. So when the US dollar goes up, the Naira is going to go up as well. So that's something we have to keep in mind. Now, listen, this fall is attributable to many factors, including a fall in the US dollar rate. Again, this next slide, if you look at the slide, if you compare same 2005, the Ghanaian cedi did about 34% appreciation on the dollar. The Congolese currency, 28%. The Zambian kwacha, they export a lot of copper from Zambia, also did 24%. The South African rand also did 13%. So what you see is this: African countries and countries that export a lot of commodities, their currency is doing very, very well when compared to the dollar. So Ghana, the cedi, has risen to one of the strongest currencies in the world because they were exporting gold. They pay for gold in the local currency, the cedi, but when they take that gold into their foreign reserves, it becomes dollar. It becomes a foreign commodity because it's now priced in US dollars. So they mine gold from Ghana, they pay for that gold to the Ghanaian miners in cedis, but when they take that gold to their central bank in Ghana, it becomes a dollar asset. Same with Congo. A lot of minerals have been exported from Congo. Their currency is up 28%. Same with Zambia. That's a cattle of copper. The football team is called the copper. All that kind of stuff is copper. And copper is the number one, the key minerals today, key commodities today in the world. So their currency has also gone up. Same thing with South Africa, diamonds and gold as well, also gone up 13%. Same with Nigeria. We're exporting crude oil, so our currency has also gone up. So it's a story about commodities. If you have a commodity and you're exporting that commodity, your currency is getting stronger vis-a-vis the dollar. That, I think, is the storyline that is going on in the world vis-a-vis the currencies and the dollar, right? So now, if you look at what other story is trending, if you look at, I'm trying to look at the total return because January is over. Like, let's look at the total return on the entire stock market and ask ourselves which stocks are doing well. And when we mean stocks, we're going to group those stocks into what we call exchange traded funds, so like a mutual fund. So we're grouping opportunities into different baskets. So we have, for instance, commodities, we have foreign stocks, we have US real estate, we have US stocks, we have foreign bonds, we have cash, we will have crude oil. So all available opportunities, we sort of put them into a chart and we're asking ourselves, what is the best performing stock or best performing asset in January? If we look at our chart again, if you want to look at the visuals on YouTube and also on Twitter, the best performing asset class in January, of course, was commodities. Which commodity? Gold, silver, copper, literally anything that's a rare earth is performing very, very well. So your minerals, your gold, your silver, your palladium, your copper, they are all doing very, very well. We use silver for solar. So we don't have silver again because China is putting some restriction on silver. The price has gone through the roof. China is buying a lot of gold to replace their dollar assets with gold assets. The price has gone through the roof as well. So commodities, the ETF GSG is the number one returning asset in the world, if you take it as an asset class, right? What else? Foreign stocks are doing better than US stocks. That's also the story that we see. So stocks in Nigeria as an index is doing better than stocks in the US as an index. So the all share index is going to beat the, let's say, the S&P as a whole, because we're an emerging economy. And like I've said, especially those countries that have got a commodity aspect attached to them. So commodities are doing about 10% after 1 month, or should we say year to date, about 10%. Foreign stocks about 6%. Foreign real estate, i.e., US real estate, at about 2.6%. US stocks, just 1.6% return. Cash, 0.3% return. If you look at the crude oil, 15% return year to date. Gold, 12% year to date. So again, it's that same story that we've seen play out in 2025. It's still playing out in 2026, which means commodities, hard assets, gold, copper, crude oil, silver, all that kind of stuff is doing better than softer assets like US stocks, especially technology driven assets. Hard assets are doing a lot better than tech, than finance, than and all that kind of stuff, especially US stocks, because US stocks are priced in dollars. And once commodities goes up, the US dollar goes down. If US dollar goes up, commodities go down. It's that kind of a swing seesaw that we're seeing. So that's still what's going on. Yeah, just answering your DM. Yeah, if you want to speak, we should be done in about say 10 minutes. Then of course, if you have a question or two, we can take your questions and just run through what you have in mind. So yes, if you want to speak, do request the mic or send a DM. I'm sure I can read that out for you. Yeah. So what else happened this week that needs us to just review and set ourselves up? The NNPC, right? The NNPC is talking about liaising or getting to partnership with Chinese investors to turn around the Nigerian refineries. All four refineries owned by the NNPCs are not functional. The NNPC MD, yeah, the group executive officer of NNPC basically said, we've spent about $1.5 billion. That was trying to fix the refineries, the one that we talked about last year, that they were putting the pilot light until it was working. It hasn't worked. So they are going now to folks that have run refineries, that have managed refineries, to come in and bring capital and invest in NNPC refineries. In this case, they are speaking to the Chinese to come in, take a partnership with the refineries, and then to run those refineries, right? That's what NNPC is trying to do, to basically get those refineries up and working. So the NNPC, let me quote you what Mr. Bayo is saying, direct quote from him. There is no way NNPC, with the structure we have, can operate a profitable refinery. Just that's a powerful statement. He's saying NNPC today, with the structure they have, cannot run a profitable refinery. We need to bring in additional capacity to complement what we have to run those refineries. In effect, he's saying NNPC today can't manage 4 refineries. That's basically what he's saying. The Chinese guys have got to come in and get those refineries working. I personally, I'm not an engineer, but I think those refineries are just dead. They're just old. I think it's a waste of time trying to get them to run. It's the same with Ajaokuta. They can run, but will they run profitably and efficiently? When something is old, you upgrade. You upgrade. Right now, with those refineries were built in 70s. I'm sure with the technology that we have, we can build refineries that will give us the same output, but maybe at a cheaper cost or cheaper power and all that kind of stuff. So we've got to be a bit careful about just trying to fix what has not worked for 4 years. The folks that build them are not Chinese, and the Chinese are going to basically come and bring their own raw material, their own spare parts to put those refineries, and they basically would own them. I don't mind them owning them, but we've got to make sure that they work. But the key story here is that Nigeria is now going to China to get the NNPC refineries working. You want to ask yourself, for what? For what reason? I would say sell them as it is, sell them and move on. If we can't run refineries, so be it. We've got the Dangote refinery, we've got the Bua refinery coming up. We have about 11 refineries, not as big as Dangote, but we do have them. So that's the story we want to watch, how that plays out, because NNPC is also trying to get ready to list. And NNPC needs to list to raise capital to then get money to also fund its assets. So that's a story that you also would want to keep in mind. What else are we looking at that happened last year is going to have an effect? Yeah, I saw this story in Nigeria, the Nigerian Revenue Service, the former Federal Inland Revenue Service, saying that they're going to scrap the road tax credit scheme. So for you that, if most of you that don't know, the road tax credit scheme was passed by executive order by President Buhari. Essentially, if you're a company, you can build a road or do infrastructure, and then you pay yourself back by not paying tax to the government. So Dangote, for instance, is built the road from Apapa all the way to Shoki, I think. Just to say he built the road in Apapa, and then when he builds that road, if the road costs him 100 billion naira, he takes that 100 billion naira from the taxes he's supposed to pay to the government. So what happens? The government gets infrastructure. The citizens, you and I, get infrastructure. Dangote is still going to pay tax because he has paid that tax, but the tax has gone to the road. And Nigeria, so it's a win-win for everyone. But the tax man is saying that he doesn't like it because the appropriation for that road has not been done formally. So Dangote has simply built the road and minus his taxes, but that the appropriation did not go to National Assembly to say we're going to give Dangote that permission, or we're going to give Dangote the revenues, because when Dangote uses his revenues, that's money that's supposed to be for the federal government. That's the taxman's argument. I don't agree with him, and I think he's doing a very, very. If he has the posture that Dangote has to come to him before they can build the road, he's going to kill the whole scheme, right? What this scheme is essentially Dangote is giving the government interest-free loans. Don't look at it as a tax. If the government had to build the road, the government would have to raise the money and invest in that road. If the government raises money, not every kobo is going to go to that road. The government has many things that they want to do with the money. So they might build that road, but it will take longer because they don't have the funds to build that road from start to finish immediately. But when a corporate comes in to build that road, they would front load the cost of building the road. They're not waiting for the government. They would front load 100 million or 100 billion from their balance sheet, from their income, build the road. Then the government then gets tax revenues 10 years. So if they build the road for 100 billion, you can then deduct and amortize that cost over 10 years. So if you stop the private sector guys from building that road, what you're doing invariably is saying that you're going to shift the burden to finance infrastructure back to the federal government. There's a reason why we did the tax for credit scheme, because the federal government did not have any money to build. So if you say they should appropriate and they should go back, no one's going to do that. The road in Boro, remember that nice road that we see on social media, the road that you see going through to Bonny, that was built by LLNG and Julius Berger, right? Imagine if LNG had to go to the assembly to get it approved, the speed, then every year they have to fund the road. Who's going to wait for that? So let's be a bit cautious in what we're doing. The tax man has to understand that Nigeria is not just about taxes. If those roads are going to get built, then the whole economy is not just raising taxes. We've got to look at it in terms of a 360 view. He's not the coordinating minister of the economy. There's a coordinating minister of the economy that will say, yes, I want us to get the infrastructure. Whereas Dangote is still paying the taxes. Whether it goes to the house first or goes to the house second, is the infrastructure going to be built? That's the way I would look at it. So it's something I want to keep an eye out on, and I'll watch it and see where it goes. And of course, I'll come back to you guys if I think it's not going to go anywhere. Now, the key story again this week was just the fall in the world of the price of Bitcoin. I know most of you guys here trade Bitcoin, and Bitcoin is just emblematic of what's happening in the world globally in terms of the economy. Like we said earlier, if you own soft assets, tech assets, maybe you own Google and all that kind of stuff, it's struggling. But if you own hard assets like a commodity, gold, silver, copper, is doing very, very well. So you've seen that gold has risen in price because gold is tracking money supply. As the world has printed more and more money because of the fall in revenues, if you look at America, we've got a lot of tariffs, we've got a lot of spending without a budget being passed, we've got a lot of spending, they're just printing money, quantitative easing. Because they are doing all that, the dollar is losing value. So gold is replacing the dollar as a store of value. Before you can hold the dollar, most central banks in the world hold the dollar. But now most central banks in the world are also now trying to hold gold as a replacement to the dollar. Not that they're going to replace their entire reserves, but they're going to increase their holdings of gold. And this is also because of many things. The US did the war in Russia and seized the asset, not did the US seized the assets of Russia that invaded Ukraine. So many countries in the world said, listen, if they can seize Russia's gold, they can also seize our gold. Let's get some sort of like some hedge against just holding dollars. So you've seen all the China, all the UAE, all the Saudis, everyone is buying gold in more and more quantities as a hedge against not just holding dollar. So you can look at the charts I'm showing you also on YouTube and Twitter. You can see that gold has just tracked the rise in inflation in America and all across the world. And as the dollar gets debased more, gold is going to simply keep on going up. So what you're seeing in Bitcoin is just a consequence of that debasement of soft assets. You know, if you compare gold and Bitcoin, they both look the same, but one is really a hard asset that's been around for centuries and has shown itself as a hedge against falling currencies. Why Bitcoin is still looked at as an IT thing, it rises and falls with the Nasdaq more than with the currency. So gold is winning and Bitcoin isn't winning. Bitcoin is not risen to the challenge of being a hedge on inflation yet. So watch that space essentially, right? The last thing I want to talk around before I just maybe close, it's going to be 30 minutes, is that I just saw on Twitter while we're watching the Super Bowl, the United States is moving a lot of assets to Europe, mostly to London and all that. When they do this, because the Europe is of course next to the Middle East. Let me give you a number. These massive planes are called C-17s. C-17s. The US has moved, right, in the last week, 112 C-17 planes. And there's like 17 in progress, so flying to the Middle East. So what do you think these things are carrying? They're carrying equipment, bombs, and all that. They've moved ships to the Persian Gulf. They've put there's an aircraft carrier there. Literally all the American interceptors, what they're called THAADs, THAADS, they intercept missiles at the atmospheric level. They are literally all in the Middle East now. So the US is preparing for something. You don't have to be a genius to know what the US is preparing for. They're preparing for Iran. Right now, US and Iran are talking, but I think the US is preparing that in event those talks do not work out as planned, they're going to bomb Iran. You don't move 120 carriers, that's aeroplanes that carry bombs from America to Europe because you just want to bluff. So I think the clock is ticking. And if there's no peace, I fear there'll be war. Why I'm bringing this up is that if there's a war now, everything we've talked about will change. The naira will change, gold will change, dollar will change, the economy of Nigeria will change, everything will change. So if you're listening to me, you want to go ask your broker and say, what should I do? Where should I invest if there's going to be a war? If war breaks out tomorrow, what happens? Oil price goes up. If oil price goes up, dollar is going to go down, right? That's an easy one for you. So what company should you invest in? Where should you find safety? But look at it this way. What's the safest investment in the entire world? It's a US dollar, 10-year US dollar bond. In the past, we knew that. Is it still going to be the safe asset today? What can replace the dollar? If you say you want to invest ₦1,000,000, what other investment would you put it into? Not for returns, for safety. That's the question. Where else can you go to? Which other country can you give your money to and you can say in 25 years you're going to get it back? Not for the returns. If it's returns, you can come to Nigeria. But where else can you go for safety? Because in a war, there's uncertainty, so you want to go for safety. That's the question you want to ask yourself, right? And if you get that answer, I would say start to mirror that portfolio. If there's no war, fantastic. But if it's going to be a war, you're going to change everything. Everything. So we have to be careful there. And don't think Nigeria is if Nigeria is an exporter of crude oil, then Nigerian budget is going to do very, very well. But we import crude oil. So if there's a war tomorrow, your PMS price is going to go to 500 a liter. Imagine what that does to your consumption. All right, folks, let's get I've had a gentleman here wants to speak. MC Alapepe. MC, how you doing? Whilst you speak, I'll look at my DMs and read a few questions. MC, you've got the floor. Did you want to speak? Okay.
Thank you very much. Well done, sir. I just want to ask a question because what is the motive? Do we have any motive or do we have any, I don't know, is there a way this tax, because when you're talking about the infrastructure or the thing that when we have our money, we can construct roads, is it something real? You know, in time like this, you can have it done and you just hear that you are even paying back the government of doing what it is expected of the government to do. How true is this system going to work in this country of ours?
No, it's not that. What it is this, right? Look at what how it's supposed to be. You take your 10 naira, you pay tax to the government. The government takes your 10 naira and builds a road for you. That's how it's supposed to work. But because Nigeria has, the government has a lot of obligations. When you give them that 10 naira, they might take that 10 naira and do something else instead of building a road for you. So President Buhari brought about a policy called tax credits for infrastructure, right? What that means is that you take your 10 naira, instead of you giving that 10 naira to the government, Dangote will take his own 10 naira. When I mean Dangote, Bua, many companies are doing it. MTN, there are many companies doing it. They will take their revenues and build the road. Then they will say, instead of us paying you 10 naira, we will take that 10 naira and build a road. Then we will not pay you that 10 naira tax. So the government and you get a road. That's what's going on. The government gets the road, it doesn't get the tax revenues because Dangote will say, well, you would have still been taking the money to build the road. So it's a more, especially for a country like Nigeria, it's more direct and beneficial because you know the road will be built. The tax money you have collected, have you seen, how many roads have you seen being built in Nigeria? That's the question you want to ask yourself. How many roads have you seen being built in Nigeria compared to the tax revenues they've collected? But right now, Dangote is building a road from our papa. I know Bua is building roads as well. MTN is building the Onitsha to Enugu Expressway. So if you just Google the tax for credit scheme in Nigeria, you will see a lot of projects that are being done by private individuals and corporates, which is infrastructure projects. So it's a very, very big part of how we are getting infrastructure done in Nigeria. We shouldn't throw the baby with the bathwater. If the issue is that you are saying that we don't have appropriation, then simply say that, let them go for appropriation, but don't say you're going to stop it and all that. I think you harm more than you do good when you do it that way. That's just my point on that. Yeah. So again, just a quick question here. Somebody is asking, you're talking about war. Let me just get to the question real quick. If war happens, what will happen to Nigerian naira and Nigerian stock market? What is your view? If a war happens, all the stock markets are going to feel a bit of a pinch. Why? Because stocks are what we call variable assets. The returns are not fixed. Because we don't know what will happen with stocks, people are going to take their money out. You don't know who will win. You don't know who is going to get blown up. You don't know if they're going to blow up the refinery in Saudi Arabia. You don't know. So because you don't know, you're going to run to safety. So what then happens is that if everybody is selling stocks, I'm going to buy bonds. Bond prices will go up, stock returns will go down. And it will be a global thing, right? Because the key that drives the global economy is crude oil and gas. And the Middle East is where you get the bulk of your crude oil and gas. So any disruption there brings uncertainty. It is uncertainty, it makes prices go up. So people run for safety. So you see bonds going up, you see stocks coming down. That's what's going to happen globally. For Nigeria, to your question, the problem in Nigeria is that we have crude oil, but we're also importing crude oil. And the bulk of the crude oil we import is the crude oil you guys use in your cars in Nigeria. So if crude oil goes up today, it's about 64. It's about 66. Our budget is 64. If it goes up to 80, Nigeria makes more money from exports, but Nigeria pays more money for imports. So your local PMS, your local diesel is going to go up in price. The kerosene is going to go up in price. Aviation fuel is going to go up in price. Nigeria might make more money because we're now selling oil at 80, but your local PM is going to go up in price, and that's just going to kill consumption. I mean, if if petrol is right now, if petrol doubles in price, how many people can drive to work? So it's a big issue. I want to pay attention to what's happening in the Middle East. We're going to be smack in the middle of that if anything goes wrong. So I can't give you an answer what stock to buy. I'm just saying, go back in history. You don't have to just ask Grok. Grok, during Gulf War or during the last Israeli war, what stocks went up, what stocks went down. Just ask it. Ask it for Gulf War 1, Gulf War 2. It will give you see the same picture. You see the same stocks that go up, stocks that come down. Same thing with fixed income that goes up, fixed income that come down. Past performance is not a guarantee of future performance, but it gives you an idea of what's going to happen, right? So that's how I'll answer that. Yeah, so most of your questions are really to do with the, but Exxon, I hear you. It's not financial advice. Exxon just means oil companies, right? So I'm not saying you should go buy Exxon. I'm telling you that if there's an issue in the Middle East that's going to affect supply, anyone that sells that a commodity is going to make more money. And gold is going to go up even to 10,000 if there's a conflict like that, because people are going to run for safety. All right, fantastic. So let's just do a recap of what we talked about today as we close. Yeah. So we talked about the macroeconomics in Nigeria. Oil production is still flat at about 1.6. I know our target is 1.7, but that is still a low number. Nigeria used to do about 2 million barrels a day in the early 2000, 2013, 2005, 2004. We're doing 2.5. And that's when you saw our Naira so strong back in those days, right? So we've got to get the production up. Don't worry too much about the price, but get the production up. We talked about that foreign direct investment is still low in Nigeria. We're getting money, but the money is coming through portfolio investment. And I saw reports last week, only less than 10% is going towards manufacturing and agriculture. The bulk of the money is going to banks. So people are buying bonds and all that. That's not the real economy. So money is coming in, but it's not going towards manufacturing. It's going to buy bonds in the bank. So we have to be careful about that, right? Then we said in the economy, if you are lending money, if you are a lender of money, right, you are making money because people are paying you high interest rates. But if you are borrowing from the banks, you are paying the banks a lot of money. So the banks are making money, but the real economy is not making money. The interest rate in Nigeria at about 31%. SMEs cannot borrow at 31%. But if you take money to your bank, you're only going to get about 11%. So you see that huge gap is bad for the economy. And I understand why the CBN is putting that high gap, because they want to fight inflation. But still, we've got to allow the economy to grow. And the only way we can grow the economy is if we have lower interest rates. That point we really can't argue too much about. Then we did talk about the Naira. Naira has gotten very, very strong, which is good because we import key items, and a stronger Naira means that imports are cheaper. That's fantastic. We asked the question, is the Naira strong because of what the CBN is doing, i.e. monetary policy and good management, or is it strong because the US dollar is going down? We said it's a combination of both, but we also said that Ghana also beat the US dollar by 34%, Congo by 28%, Zambia by 24%, South Africa by 13%. This was in 2025. And if you notice, those four companies are all commodity exporters. So if you export commodities, you tend to do better in terms of your currency vis-a-vis the dollar. Same thing, we looked at the whole market and we said what's doing well today is commodities, gold, silver, palladium, stuff like that. That's what's doing well. It's not the soft assets like tech and banking, it's those hard assets, crude oil, gold. That's what's doing well. Bitcoin is down -4% this year, -4%. But 5 year, if you look at the 3-year return of Bitcoin, 75%. Look at the 5-year return of Bitcoin, 14%. There is no asset I see here. The only asset, there's no asset that's beating Bitcoin over 3 years. But look at US stocks. Over the long period of time, no asset has beaten US stocks over, say, 5 years, none. So it's a long-term play if you're doing US stocks. Bitcoin has shown that it's not a store of value per se. It might be transactional. It might make you money, but I don't see it as a store of value. The NNPC, of course, is trying to sell its refineries to the Chinese. We've talked about that. We said be careful about that. Those things are old. Let's be careful what we're getting into. NNPC is admitting that they cannot run a profitable refinery. So let's just be careful about that. That's just what I want to say there. And we also spoke about this tax credits. We just talked a lot about that. Then we talked about gold as a hedge. And we finally ended up with war. We said everything we've said. If there's a war between the Iran and the US, it throws everything into the air, and we cannot guarantee where it's going to land. So be careful, look at your portfolio, get ready, buy some insurance so that you are basically ready if anything happens. All right, guys, fantastic. I see the tweets, but really can't look at them too much. But I do thank you for listening. Want to make this every Monday, just talk around this stuff, very, very quick bits. We talk around this on Monday, get you guys all going so you guys can have those talking points that you need of what happened with our own twist on it, right? We try to do the international, also do Nigeria, but again, just to inform you, Nigeria is now connected. So things that happen abroad have an effect on Nigeria, right? As a matter of fact, I'll go as far. If you were here last week, Monday episode last week, we talked about Mr. Kevin Walsh. He's the US Fed chairman. But whatever he says has an effect on Nigeria. If the US raises rates on the dollar, right, it's not good for Nigeria because we're now competing with a dollar rate, so people are going to go to dollar. If the US reduces rates on the dollar, it's good for Nigeria because then people can come to Nigeria and do carry trade. So what he says is very, very important. So like on the past when Nigeria wasn't that connected, right now we're connected. You have to listen to what the CBN government of Nigeria says and also what Mr. Kevin Walsh says. If he says we're going to cut rates, Naira is going to do well. If he says we're going to raise rates, Naira is going to do badly. So that's the point, to give you that understanding of how these things really affect the Nigeria, affect your wallet and all that. So we'll be back here again next Monday. Thank you guys for listening. You guys have a fantastic day as you go around your day. And I'll see you guys next week. We have our Sunday morning space. We're going to have a stockbroker with us telling us where to invest. Then we're going to have our Monday space in the morning, 7 a.m. So I hope to see you guys then. All right, guys, thank you so much. You guys have a good one and bye.